All right, everybody, I want to welcome you guys to tonight's training. And this is a very exclusive training that I decided to do as a little bonus for those of you guys that purchased my book in the closeout sale of the Ultimate Team Building Formula. And we were able to sell all the ones I had on hand, as well as, we're almost sold out on Amazon too, like maybe like 15 left on Amazon totally, right? And then we'll be done with that. I'm super excited. So what we did on Thursday was we did a training for the marketing, right? Because we had different people. We had some people that were interested in trading and some people that were interested in the marketing. And so I wanted to bring some value to both groups, not just one. So we did the training the other day on marketing, recruiting, and I showed you guys some basic steps on how to use Facebook, how I've used Facebook to recruit organically for free, essentially. And then on tonight, what I'm going to do is I'm going to share with you guys one of my harmonic scanner strategies that works really good, right? It works really good. And I'm still refining some things in reference to time frames, but it works really good with the trading. And so what I'm going to do is I am going to first, let me log into my account here, and then I'll be able to share my screen. Hold on, guys. All right, let's do this. Let's share screen. Okay, you guys should be able to see that. Is that right? Harmonic scanner, web scanner. Okay. All right. So guys, what's so special about this is I've actually created a little training on this actually. I call it, the simple 5-step strategy to winning more trades than you lose. Okay, it's really, really simple. A lot of people that trade in the Forex market usually lose more trades than they win. This is not so much about winning all your trades. It's not about being perfect, and it's not about being 100%. It's really about having something that you can use that allows you to win more than you lose on a consistent basis. All right. So we've got the 5 steps. So you'll definitely want to take notes and write these things down. And before I get into step 1, I'm going to have to go over just a few little things to make sure everyone is on track with how the scanner works and what makes it so powerful to begin with. All right. Let me kind of bring this in so I can kind of see it a little bit better myself. Okay. All right. So here, the harmonic scanner, this is one of the tools that we have inside of iMarkets Live that I love, because this tool pretty much just kicks out trades. It kicks out trades when a particular pair falls into a certain ratio pattern, and the patterns are called harmonics. All right. So harmonics are patterns that are like mathematical little equations and things like that, that when the market is getting ready to, or it's anticipated that the market is getting ready to do a reversal, the scanner picks that particular trade up. So the scanner only picks up reversals. Okay, so if you're a person that you're looking for continuations and this and that, so on and so forth, that's not what the scanner is going to help you to do. The scanner is basically saying, okay, the market was going up and now we believe it's about to go down. Or the market was going down and now we believe it's about to go up. That's what a reversal is, and that's the beauty of the scanner from that standpoint. And it just uses harmonics to identify these reversals. Okay, so that's just a little preliminary. Another little preliminary over here on the left-hand side. If you already have the scanner, if you don't have the scanner, you'll probably want to get the scanner, okay? But over here on the left-hand side, you've got multiple different brokers, okay? And it doesn't really matter which broker you use, but these brokers are used by iMarkets Live to pretty much just pull in pricing data. And pricing data is what makes these candles, right? So these little things are called candles. So the data is pulled in from, 6 different brokers, and you can choose whichever broker that you want to see what pricing data has been pulled in by each of the different brokers. but these are the 6 that are there. So that's what these are. And then right here are like little tools to help you draw and identify. And we'll be using some of that here with the 5 steps. Okay. So what I'm going to do first is I'm going to look and I'm going to see, I'm going to make sure, this is like another little prerequisite. We want to make sure that before we move forward, that we have not already hit our take profit 1. This TP number 1 is take profit 1. This is take profit 2, TP number 2, and TP number 3 is take profit 3. So we want to make sure that we have not already hit our take profit 1. That means that this is a fresh, ideally we still have an opportunity to participate in a fresh trade. Okay. So that's what we're looking to do. So this one has not hit the take profit 1. All right. So that's a good thing. The next thing is that you can do this on, well, the scanner only picks up, like, let's just go to JFX, for example. The scanner will only pull up patterns in the 15-minute chart, as well as the 1 hour, the 4 hour, and the daily charts. Okay. Hold on one second, guys. Let me make sure that everybody is muted. If you're not muted, please mute yourself. Okay. Just to make sure. All right. So it only picks up scans from the 15-minute chart, 1 hour, 4 hour, and daily charts. Okay. It does not do more of like your scalping time frame. So it doesn't do the 5 minute. It doesn't do the 1 minute, 15, 1 hour, 4 hour, and daily. And I do this with the 15-minute chart and the hour, but I will say that what I found is that the hourly chart is going to have a little bit more stability. And I'll talk to you about what that means in just a second. But you can do it with the 15 minutes. Okay. It's perfectly fine. So what we're going to do is we are literally going to, oh, look, that's Oren saying, thanks for tuning in. He's texting. All right. So what we're going to do is we are going to, we could start with this pattern right here. Okay. We can start with it because it's making sense. What time is it? It's 9:18. Maybe by the time we'll kind of go through we'll go through the 5 steps and we'll start here. In fact, let's see if we can find an older pattern. That way we can walk through all 5 of the steps, and then we'll come back to a fresh one to see if we can get one in. All right. So now with the scanner, the most recent scan is going to be at the top. In other words, the most recent pattern that you see over here, the freshest, right? It's going to be at the top. All right. So let's just see here. That's that. Let's come down a little bit. Let's try this Euro USD and let's see where this one is. Okay, cool. So we've moved around a little bit. You can see this from here. Let me zoom in. Okay, so the first thing that I said is that we want to make sure we have not hit take profit 1, which we have not, okay, in this case. This is a decent one, and we've moved a little bit past the point at which this scan was initiated. All right, so let's start with our 5 steps, okay? Guys, we're going to take down the notes on these, and we're going to practice. We're going to execute. We're going to see if these scans fit our 5 steps. For me, if all 5 rules are not met, I don't take the trade. It doesn't mean that the trade won't still go, it still won't hit take profit or 1, 2, or 3. It doesn't mean that it won't do that. It just means what I'm looking for is high probability that it's going to, right? It could still do it, but I'm looking for the highest probability because you never know. Well, you can kind of gauge what the market's going to do, but I don't have a crystal ball, right? And so based on certain things, I want to gauge whether or not the market is going to follow these rules. And if the market follows these rules, then I'm going to get in the trade. If the market does not follow the rules, then I'm not going to get in the trade. Might you go back to a trade that you did not take because it did not follow the rules and it actually hit take profit? The answer is yes. It happens a lot of the time. But when you don't have high probability, then you're kind of just guessing, right? And remember what this is called. This is called the 5 steps, the 5 simple steps to winning more trades than you lose. And so if your goal is to win more than you lose, then you have to get into the habit of having a plan by which you're going to trade and sticking to it no matter what, okay? No matter what. And so we're looking for high probability setups, high probability trade setups, right? Hold on. Somebody is unmuted. Hold on. I just want to make sure that we've got everybody muted. Hold on. Okay, that was, let me mute John. Let me mute Quinetta. Why do you guys want unmuted here? Okay, fine. There we go. All right. And I'll check in from time to time because I've got my window where I can see your faces. I've got that minimized so that I can't see your faces, so that I can see my whole entire screen. All right. So step number one is that this point right here that's on the D, you guys can see that this pattern, let me zoom out for a second, that this pattern, right, has 5 points. It has the X over here. It has an A point. It has a B point. It has a C point, and it has a D point. All your scans are going to have these points, okay? Your A, B, C, D, and your X, all right? And what we're wanting is we want the candle that is, the candle that corresponds to the D point, we want that candle to have closed already. In other words, that candle is not moving. Now, you guys can see this is a Euro USD pair, and we are on an hourly chart. So that means that we want this candle, right? You guys can see that red candle. I'm zooming a little bit more, right? You can see that this D point is on this red little doji looking candle, right? So, so it's right there. And so now we can see that 1, 2, 3, 4, 5, 6 more hours have passed since this candle has closed. Okay, and that's actually a pretty good thing, because what happens sometimes, even on the 15-minute chart, it happens on the hourly chart sometimes too, but not as often. On the 15-minute chart, what happens is that this D point can move. So what does that mean? That means that this candle right here will close, the D point will be still, and then the next candle would form, the next candle would form, next candle would form. But what would happen is if this candle then went higher, right? If the price went higher than this candle, then the D would then move to that candle, right? And if the D point moves to another candle, all bets are off. You have to start your assessment all over again, right? Why? Because our evaluation is based on this position. But if as market conditions change, you have to be able to adjust and be flexible. So if this D point moves because a price, one of these candles reflects a price that went higher than the D point, the D is going to also move, which means that now you have to start your analysis over again. On the 15-minute chart, because it's only 15 minutes, it's possible sometimes that that second candle or third candle or fourth candle goes higher than the D, and then it moves the D, right? So now if you're in a trade and the D moves, it kind of throws things off. So that's why on an hourly chart, it has a little bit more stability, because there's 4 15-minute candles in 1 hour candle, right? So if on the 15-minute chart, the third or the fourth candle was higher than the D and it caused the D to move, that would still only be 1 candle on the hour chart, right? And it makes it a little bit easier. So as you can see, we've surpassed this D by 1, 2, 3, 4, 5, 6 different candles already. Okay, so it looks like it might be pretty stable, which makes it good for us in our analysis. All right. So that's number one. Step number one is the D candle must close and be done. Okay, D candle must close and be done. If during this process, the D point moves, abort the mission. Okay, if the D point moves, in other words, if a candle comes and it goes up above the D and the D actually moves and adjusts to that new candle, abort the mission. You have to start over. Okay, that previous trade, that previous analysis must be redone in order to verify or to validate its correctness, I should say, or its high probability at that point in time. Okay, so let me just do this. Does that make sense, what I'm saying? The D point must be solid. It cannot move. If it moves, you must start reevaluating. Okay, and I'll just say this. If while I'm talking, you have a question, go ahead and unmute and just stop me, because I'm not looking at you guys. Okay, so I am now, but I'm getting ready to minimize you again. All right, fine. So that's number one. Number one is D candle must be closed and not move. So I'm going to minimize this back so we can all see. Okay. And then what I'm going to do is I'm actually going to put a line here. I'm going to take it and put a vertical line, and I'm going to make it, let's say I'm going to make it yellow. Hopefully you guys should be able to see that. I'm going to make it a big, thick line, right? And I'm going to park it right there. Okay. In fact, let's just make it a different color. Let's just make it, that's blue. Let's just make it this color, this pink. Okay. All right. So everybody can see that's where the D is. All right. So let me minimize this back out. Scoot that back down and open it up a little bit more. Okay. So D candle must be closed. The second thing that we want to do now is we want to do what we call check for divergence. All right. We want to check for divergence. Now, what does divergence mean? Divergence means that that there is a reversal imminent. That's essentially what it means. It means that the market is going one direction, and if we can show divergence, it means that it's more than likely than not that the market is going to reverse. Okay. If we do not find divergence, it means that more likely than not, the market is not going to reverse. Okay. This is why you have multiple confirmations. That's what we're kind of like. These are five, I call them 5 steps. They're really like 5 confirmations. Okay. So we're going to check for divergence. And the way that we check for divergence using the scanner is we want to look at the X to D point. Okay. You guys can see this line, right? See the X point over here and the D point over here. This line between the X and the D that's connecting the X and the D, we want to see what angle that line is directed in, right? So this line here is actually angled downward. Okay, it's angled downward. And to detect divergence, what we're going to do is we're going to find down here, this is our RSI line, okay, down here, our relative strength index. What we're going to do is we're going to find the corresponding X point on the RSI, and we're going to find the corresponding D point on the RSI, and then we're going to connect the lines from the X to the D on the RSI. And we want that line to be the opposite direction of this line. So if this line is going downward, we know off top that when we draw our line in the RSI, we want that line to be angled upward. Okay. And of course, the steeper the line, the better, right? The steeper the line, the better. As long as it's divergent, it's divergent. All right. As long as it's opposite direction, it's opposite direction. However, if it's steep, it's kind of like a greater confirmation even within the confirmation. Okay. So let's do that. So here's our X point right here. So let's go ahead and put a line. Let's come down here to the RSI line. And you guys can see that my crosshair, you can see the vertical line in the crosshair. I can come down here to the RSI and I can match it up with the X point at the top, and I can pop my line down right here, right? Wait, hold on. Is that it? Yep, right there. I can pop my line down right there, okay? So I've got my X point that's in the RSI, or my X point in price action is now lined up with my X point in the RSI. And what I'm going to do is I'm going to actually make this a little bit smaller here so that we can kind of see it like that, okay? So you guys can see that it's lined up perfectly with the X point, okay? Now what we're going to do is we're going to do the same thing over here with the D point, right? With the D point. There we go. All right. So we got our X and our D lined up down in the RSI. And now what we're going to do is we're going to draw a line between our X and our D down here. And what we're looking for is where the RSI line is, where the RSI line intersects with our little magenta pink line. Okay. So that's going to be somewhere right in here. Okay. Somewhere right in here. And you do want to be as accurate as you can. It does matter. It does matter. Okay. You don't want to be sloppy with your lines because it will throw your evaluation off. So I'm going to get a trend line. And this trend line with the RSI, with the harmonic scanner is kind of funky. So sometimes it'll stick, sometimes it doesn't stick, so on and so forth. But this line is kind of like somewhere right in here, I would say, okay? It connects, it intersects somewhere in here, right? And I'm going to draw it over to here, okay? All right, and then let's kind of make the line just a little bit thicker so you can see it. Well, probably make this a little bit thicker. Okay, so now you can see So now we have the X to D in price action going down. And you guys can see that it is a steep line going from X to D going up. Okay. So step 2 is to check for divergence. And what we want is divergence. If it's not divergent, I do not enter the trade. I'm done at step 2. I just move on to another pair. Okay, that's just zip, zip, zip. That's my trading plan. That's how it works. All right. So step 1, the D must be closed. Step 2, we must have divergence. And this is how we check for divergence. Okay, so as long as we have divergence, we move on to step 3. If we do not have divergence, I don't do step 3 because it doesn't matter, right? It's aborted because step 2 was not fulfilled. All right. So now that we have it, step 3 is what we're going to do is we're going to draw what I call the like the confirmation trend line. Okay, this is my own little term for it. So what we're going to do is, as you can see, there's this C point right here, right? Let me see if I can make this a little bit bigger so you guys can see it. Okay, make this bigger. So you can see that we've got this C point right here, right? This C point, actually it's right here, this red candle. That red candle was the C point, right? So this red candle is the C point right here. That's the lowest point, okay? And so what we're going to do is we're going to take a trend line and we're going to draw our trend line from this C point all the way up through. But what we're looking to do is we're looking to connect using the wicks, okay? If wicks are applicable, we're looking to connect the reds, okay? We're looking to connect the reds because those indicate the drops, right? We're looking for the drops in the market because this is the lowest point. So we want to find the next lowest point, right? The highest low, the next lowest low, okay? Then the next low, then the next low, like that, right? Because these are the highs up here, okay? So we're going to do is we're going to take our trend line, and now we're going to draw from our C point up, and we're going to connect. Now, here's the deal. Hold on one second. Let me stop this, delete that. What I'm going to do is I'm going to zoom out for a second because what we like to do is the rule of thumb is when you're drawing a trend line, it's 1, 2, go straight through. Okay, what that means is when you're taking a line through these candles or through these wicks, you want to connect 2 points, right? Connect the 2 points. And once you connect the 2 points, just draw the line straight through. You're not looking to connect. The line does not have to touch every single candle, every single point. You're looking for the ones that are the closest, ideally, to this line right here. You can see this line is drawing from C up to the D, right? That blue line. So we are looking to do that, the closest candles, right? So as you can see, we've got some red candles in here. We got a red candle right in here, a red candle here, red candle in here. And so my point is that we're not looking to draw the line way out here, right? Way out here. We're looking to draw the line closest, as many points as we can on the red candles, as close as we can to this line connecting the C and the D, okay? So let me grab this line again here. And I'm gonna start here. And I'm gonna try to find 2 points, right? Remember I told you this thing is kind of sticky. I'm gonna try to find the points that's the closest to, okay? Now I'm gonna highlight these for you guys in just a second. Hold on. And show you why I'm choosing these points. Hold on. I'll draw it out so you can see why I'm choosing these points. Okay. So like that, okay? And I'll even make this line right here a little bit thinner so you can see, right? So you can see I've drawn this line from the C up through where the D point is, right? You can just keep drawing it wherever you feel comfortable, okay? Now let me just show you. In here, let me make this bigger. Remember I said we're looking to connect the red candles, right? And I want red candles as close to this blue line that's connecting the C and the D as I can. And so what I did, what I did was, you can see this red candle right here, right? You can see this red candle and even this red candle. Hold on. I'll zoom out. Hold on. That red candle there. Oops. That red candle there. Well, these two, actually. Hold on. Okay. And let me zoom in so you guys can see that. You guys see how even here, right? Even here on this candle, red candles is what we're looking for, okay? Okay, so you see right here how this candle, the body of the candle is like right on the top of the line. Right here, the wick on this one, the wick comes down right on the line. Right here, even this one, the wick comes right on the line. Right here, the wick comes right on the line. Okay, so as I'm drawing this line, I could hit this point right here. I've got my first point way down here. So this is one right here. So that's one. I just need a second line that's close, right? And this one is a second line, for example. And when I just take that line straight through, I also happen to hit another one right here, another one right here, right? One right here is the body. One right here is the body. One, this is the wick, right? You guys see that? All right. So we're going to do the 1, 2, go straight through, and we're going to draw that confirmation trend line. Okay. That's step number 3 in the process. Step number 3. So as long as we have divergence, we're going to draw that little trend line. Okay. Next, step number 4. Step number 4. Here's where it starts getting fun. Step number 4 is we're going to now wait. We're going to now wait. Let me move. Okay, I'm gonna move this line right here because we don't need it. Okay, we got it in the RSI. Now we're gonna wait until a candle closes below this trend line. Okay, we're gonna wait until a candle closes below. Oh, don't mess up my stuff. Hold on. Below this trend line. Okay. Now, why are we closing below the trend line? Well, for one, you got to recognize the direction that we're going. Number one, we're saying that the market is going up. And remember, the scanner picks up reversals. So now it's telling us to get in up here. And because our take profits are down, then it looks we're going to be doing a sale. Okay. So we're looking to sell the market. All right. The key is to, well, when do I get in to sell the market? Right? That's where it is. Okay. When do I get in to sell the market? All right. So we've got that going on. So it's picking up reversals. We're looking to sell. And the whole point of the trend line is to help us identify when structure is broken. Okay. Structure. What is structure? Well, structure basically is where, price is kind of hanging out above this line because it's in an uptrend, right? And even though it dropped below the line here, it still was making strong pushes upwards, right? Strong pushes upwards. So it's below the line, but it's still making its own its pushes. Okay. So what we're looking for now is when we get to this D point, remember the scanner is putting together certain ratios based on harmonics. Okay. So we don't have to know the harmonics. All we have to know is how to use the harmonics in conjunction with these 5 steps, for example, to help us identify when to get in. Okay, when to get in. Now, why wouldn't you get in all the way at the top where this says entry point? Well, you could. You could set your entry point for here, but the market may not go all the way up there. So if it didn't go up there and then it dropped down to take profit 1, then you would have missed the whole trade, right? So what we're looking for is a more perfect entry into the trade. this gives you an idea, right? So now this lets you know that if price starts to go above that, right? If price starts to go above that, we've got a stop loss up here, right? We got a stop loss up here, but we want to identify the most ideal time to actually get into this particular trade. Okay, that's what we're looking to do. So everybody understand that? Hold on, let me come back here. Let me just check. Does everybody understand that? So you're drawing your trend line, and you're finding that's where you're gonna. And if you're in a sale, you're looking for the candle that closes below the trend line. Okay, in the direction that you want. So we're looking for a red candle to close because a red candle indicates a sale. We're not looking for the blue candle to close because the blue candle indicates the market's moving up. So we're looking for a strong move down, and we want a red candle to close below the trend line. And once that candle closes below the trend line, that's when we're going to get into the trade. Okay, which is essentially step number what step am I on? What number am I on? Is this 4? Wait, 1 is the D, 2 is divergence, 3 is the trend line. 4 is the candle must close below. That's 4. The candle must close below. If we are in a buy though, if we're in a buy, what must the candle do? The blue candle. What must the blue candle do? If we're going to be in a buy on the scanner. Class participation. What must the blue candle do if we're on a scan and we're looking to buy? And we're on step 4. What do we need to happen?
Close above the trend line?
Correct. We need the blue candle to close above the trend line. In the sale, we need the red candle to close below the trend line. Okay? Really simple, easy peasy stuff. All right? Cool. So we've got that. All right? So now, hold on, let me go back to minimize this screen so I can see. So step 4 is wait for the candle to close below. Now, step 5, guys. Step 5 is get in the trade. That's step 5. Once the candle closes below the trend line, get in the trade. Okay? But here's the key. The key to getting in the trade with proper risk management is to get in at a 0.01. I don't care if you're trading 10 standard lots. I don't care if you're trading 50 standard lots. You want to get into the trade with as minimal risk as possible. Because what happens if you get into this trade with a standard lot, that's a 1.0, right? And then the trade goes backwards, then now you're at $10 per pip negative, right? Or in drawdown. And you don't have to be that much in drawdown when you could just get in at 0.01. And if it goes backwards 10 pips, you're only down $1, right? 0.01 times 10 pips is $1. So you're only negative $1. It's not that big of a deal, right? And you can hold it out. So what we're going to do is we're going to wait till the candle closes below, which is step number 4. And step number 5 is that we're going to get in. Step 5A is get in at a 0.01. Okay. Step 5B is once the trade starts moving in your direction. In other words, for us, really gaining momentum, moving towards this take profit 1, then you want to actually put in your real lot size. That would be 5B. So step 5 is get in the trade. 5A is get in the trade at 0.01. 5B is wait till the trade starts picking up momentum and put in your real lot size. Now, because the market is closed right now, you guys can see a little bit of what I'm talking about, right? You can see why we wait, why we put in the 0.1. So what would have happened was this candle would have closed, right? And the hold on. Let me get this candle right here, or this So the market would have closed to this red candle right here, right? This candle closed too right below, but that was the D, right? The D has to close on its own. Okay, then we need another candle. It's not going to always be the first candle after. It may be the second, third, fourth, fifth. Doesn't matter which candle after, but we're not getting in the trade until after a candle in our direction closes below the trend line. In this case, it happened to be the second candle from the D. Okay, in this case. So because of that, this candle went down and it closed, and we would have got in somewhere right around there. Right where that green line is. We got in somewhere around there at a 0.01. At a 0.01, right? Now, if we were at a 0.01, and as you can see, the market, it went up, it came down, it went up, it came down a little bit. It's in a consolidation right now, right? But if we got in right there at a 0.01, oops, hold on, this didn't get stuck. Let's get this one out of here too. Oops, hold on. Let's get that one out of there. It's taking forever. Okay, let's come back. We get this. You can see we got in at 17367, right? 17367, and the market right now is at 17411. Okay, so you can do the numbers. You can do the numbers, and you can see that that's only what 36, 37, 38, 39, 44, 5 pips, right? It's only 5 pips, right? Or you can get your tool, like I've got, which is this right here, your price range, right? The price range tool. And then I could come here and I could measure it, right? So it's like, it says like, okay, like right there, like 5 point, goodness, I don't know why this one keeps doing that. There we go. Like 5.3 pips. Right? So that's roughly what it is, 5.3 pips. So if you were in this trade at 0.01 and the market has gone up and it's in consolidation right now, you are down all of 50 cents, which should not cause anyone to lose any sleep. Okay? And then we're just going to wait. We're going to wait. We're in the trade and we're going to wait. We're going to wait until the market starts to make its move down. Okay? So it starts to make its move down. Now, once it does that, you're going to pop in your real lot size, all right? And then you're going to write it down to take profit 1, or you're going to do 10 pips and dip. It just depends on what your trading plan says, and it depends on what you're looking to do. But the safe thing is, not the safe thing, but an ideal thing is to do the 10 pips. Is to do the take profit 1, because on the scanner, it's a very, very high probability that take profit 1s get hit, okay? Or if you don't want to wait to take profit 1, you could, and you have a larger account, something like that, you could always just increase your lot size and go 10 pips and be done with it, right? Be out the trade, not even worry about it, and you're done, okay? In this case, from the plates where we got in to take profit 1, right? Look how many pips we've got. Oops. How many pips we got? Was that 60 pips? Is that right? So 36 and 75, roughly. 36. What's that? Yeah, 36, 4, 5, 6, 7. Well, 40. Hold on, something's not right. Hold on. Is that right? We got in at 36. Oh yeah, because we went down. That's right. 60 pips. Right? So 60 pips. If you got in, let's say somewhere around here, right, where this next consolidation is, right in here, you got in here with your real lot size, then you would have 0.01 down to about here or here, and then you have your real lot size from here down there. Either way, you got 60 pips. Okay, so that is really the idea of the perfect entry, how to find a perfect entry, and the 5 simple steps to winning more trades than you lose, especially trading with the harmonic scanner. All right. So what I'm going to do is I'm going to come off of this for a second and bring you guys back out. I'm going to stop sharing for just a second. And I'm going to ask and see if you guys have any questions and if that makes sense, or if there's anything that I need to clarify for you so that you know you've got it. Does that make sense? Does the 5 steps make sense? Everybody know what the 5 steps are at least, right? Everybody understand step 1, wait till the D close. Step 2, you check for divergence. No divergence, we're not getting in. Okay. Step 3, we're going to draw our trend line. Okay. Everybody know how to draw that trend line. Okay. Step 4, you're going to wait for the candle to close below the trend. Or if you're in a buy, wait for it to close above the trend. Right. And step number 5 is you're going to get in the trade. 0.01. Easy. Right. Once the trade starts moving in your desired direction, you plop your real lot size in there and you write it down to take profit 1, or you go 10 pips and dip and you're done. Any questions, guys? Y'all got it? Thumbs up? All right. So now all you guys will want to do is you want to practice this, right? Just practice this in your demo, test it out, right? Get good with drawing your trend lines, because your trend lines matter, right? Your trend lines matter because your trend line gives you your entry point, right? People are like, well, how do I know when to get in? You get in once that candle closes below the trend line. But if you're off and you're sloppy with your trend lines, it's going to be off. Right? It's going to be off. So remember what I said. You're looking for those bottoms, right? Which are the red candles, looking for those bottoms. And then on the flip side, if it's a sell, you're drawing a trend line down, right? Because the market would be going down and you're looking for it to reverse or go up. Then you'll be drawing a trend line down and you want to connect the blue, right? The blue wicks or the blue candles as close as you can to that line. And then as soon as the next candle closes above that trend line, boom, you plop in, you get your trade, or you enter the trade, 10 cents, right? 10 cents. Simple as that. All right. Well, if y'all got it, then whoop-de-doo, we are good to go. So I'll go one more time. Any questions? Everybody has a smile on their face. That looks fabulous. And that's that. Okay. So what I'm going to recommend that you guys do for a little bit of homework, for those of you that need to do it, is just go through some of the pairs on the scanner. Right? Even the ones that have already hit take profit 1, to back test what I'm saying. Right? So just back test it. Just go in there. Even if they've already hit take profit 1, run the number. Say, okay, step 1, the D close. Okay, great. Step 2, just check for divergence. Step 3, draw the trend line and see where you would have gotten in at. Right? And then step 4, step 4 is wait for that candle to close. See where you, step 5, see where you would have got in the trade at, and then see if it went to take profit 1. Right? Just keep doing that. Just practice, see on ones that have already passed, and get comfortable, get confident in knowing that that's how it works. Right? And then go back to the 15-minute one and check it too. Like I said, the only difference with the 15-minute one is that sometimes that D will move, right? A lot sooner. So you've got, you got the D that's standing there, and you've done your analysis and you're waiting 15 minutes from then, 30 minutes from then, 45 minutes from then, the D moves, right? Like, oh man, okay. So then you got to start over. But if you're looking at the hourly chart, right, then the D would have that candle would not have closed yet. You understand what I'm saying? That same hour, that candle would not have closed yet, which meant that you wouldn't be ready to evaluate that trade, because you have to have the D candle close before you move. So focus more so, I would say, on the hourly. You could do the 4 hour too. The 4 hours even more, right? Even more accurate. However, you're waiting longer. You understand what I'm saying? You're waiting 4 hours for the next candle, or for the next candle, for the next candle. So the hour chart is kind of a sweet spot. 15 is cool sometimes. Just kind of have to know, keep track of whether the D is moving or not. All right. Practice, back test the strategy on those things, guys. And then be sure to let me know what you figured out and how it's panning out for you, and whether the strategy is working, and then practice when the market opens with in your demo. Fair enough? All right, cool beans, guys. So what we're going to do is we're going to go ahead and call this training a wrap. And I'll make sure we go ahead and get the recording up to this one and our last one on this evening. All right. So y'all have a good rest of your weekend, and we'll be chatting. Bye.